Hello, this is Louis Frank, Alternative Asset Manager at Lotus Group Advisors. I hope everyone is doing well and continuing to stay safe. There is no doubt that the past few months have been interesting and stressful to say the least. And as we strive to provide our clients with maximum transparency, we thought another video series would be helpful to provide some updates on the private investment front. My goal here is to provide some high-level updates across our three major categories, our timeline, and some additional details about the much anticipated launch of Income Plus Fund 2. As always, our advising team is prepped and prepared to answer any additional client questions. With that being said, let's go ahead and jump right in. Since our last update, we continue to monitor all GPs on a weekly basis and are cautiously optimistic about their results through the pandemic thus far. All of our current GPs have increased their communication channels and materials, and we feel confident that they are doing their best to provide real-time updates when available and appropriate. The positive news is that, to date, we still have not identified any major issues across all strategies, although we are closely monitoring the duration of current stay-at-home orders, as we feel that this is an important catalyst affecting our managers' ongoing performance. Now on to the updates. As a reminder, Lotus Group primarily invests across three different investment categories. Most of our clients hold a unique blend of all three, and our advising team is happy to talk further about individual client mixes. Let's go ahead and go through a brief update of each category. On to the first category, our recession-proof managers. These managers have performed well through this pandemic and continue to generate positive returns despite market volatility. An example of this is the life settlements asset class, which has produced positive month-over-month returns throughout 2020 and has shown that it is largely uncorrelated to the broader market. Our second category is our recession resilient strategies. This category too has also performed well thus far, with most of our managers blunting declines and continuing to produce positive results. Our real estate manager, investing in mission-critical industrial real estate, has collected 85% of rents in both March, April, and May. Historically, this manager has received 95% of rents based on occupancy, and even with this baseline being lower in 2020, they're still able to fully cover their dividend. However, as we continue to monitor the real estate industry as a whole, we wouldn't be surprised to see a reduction in property values at some point this year. Though we feel very well positioned as of now, but we will keep a close eye on current stay-at-home orders and their possible effect on these recession-resilient strategies. Lastly, our smallest allocation is to cyclical strategies, which can encounter headwinds in times of stress. For these managers, we saw drops in NAV in both March and April. However, we saw an uptick in NAV in May and hope to continue to see these trends in the coming months. Government assistance and PPP loans have been important for these industries. We hope that this assistance allows them to continue to produce positive results. For example, our mid-market lending strategy saw a 14% drop in NAV for April, but a 9% recovery in May. Overall, the vast majority of our client portfolios have benefited from our private investment recommendations, as they have been able to generate positive returns and blunt market volatility. As a reminder, I'm constantly updating our internal dashboards for the advising team. So if clients want to know where their specific portfolio lands between these three categories, we are happy to provide this information. Otherwise, your performance will continue to accrue on your quarterly reports. Now onto the timeline. We continue to track our original timeline and are extremely happy with our progress. We just finished up with our mid-quarter manager check-ins and have spent the majority of May knee-deep in Income Plus Fund 2 research and strategy. Our original plan remains intact, and we will keep you updated if there are any material changes in the future. Lastly, as mentioned in the last slide, we have been working extensively on the launch of Income Plus Fund 2 and are currently targeting a Q3 launch of the fund. We are working with potential partners to help seed and capitalize this launch and are excited to continue to meet with these partners and see what the viability of the launch will look like. However, many of our clients have inquired about the potential theme, and we have a theme loosely outlined, which will look like the following. 60 to 80% of the portfolio will be similar to Income Plus Fund 1. There will be asset-backed strategies that are somewhat recession resilient and hope to produce some sort of current yield. These strategies could include life settlements, litigation finance, or infrastructure. However, the current market environment has created some compelling investment opportunities. So we are targeting 20 to 40% of the portfolio will be in opportunistic strategies. Some of these may include secondaries, distressed real estate, or some other strategies that have similar characteristics. We hope to solidify this investment thesis and structure in the coming months, and you can expect a more thorough update end of Q2 or early Q3. Again, our team is available and happy to answer any additional questions you may have. We hope that this update has provided some additional insight for our client base. Thank you again for your time, and we hope that you all have a safe summer.